Okay, it is January the 21st, Sunday evening, about an hour after the weekly open. Let's do the market outlook and plans for the week ahead. Jumping right into it, as far as news or narratives go, nothing's really changed. Essentially, where we're at is just sorting out the post ETF flows. So, as we've talked about a lot recently, we've definitely had some aggressive supply hitting the market. The main culprit for that seems to be from the GBTC unlock and conversion. So my main focus is continuing to monitor spot flows, particularly the Coinbase flows, to get an idea of when these sellers are going to exhaust themselves. So I'll go ahead and dive into that more when we get to that section, but that is definitely the main thing to be focused up on this week is when is the GBTC sellers going to stop, and we can basically resume up only whenever that begins. But until then, I do think it makes sense to be slightly risk averse. So let's go ahead and jump into the high time frame, and then we'll work our way down. Starting off with the higher time frame, we are wedged between the same key levels that we've been wedged between for a long time now. Essentially, previous quarters value area high and the 2021 yearly VWAP. So we are wedged between 44 and 40K right now. 40K support, 44K major resistance. If price is able to get above 44K, then we should be able to see a quick move towards 54K. If price gets below 40K, then we would see 38K as the first downside target. And below 38K, we see 32 as the next major downside target. So 32K, as we've talked about time and time again, is the ultimate dip buying territory. It is important to keep in mind that we might not ever make it that low, and 38K potentially is the dip buying zone. So that pretty much covers it for the higher time frame, right? We are, we got bonked back down, and we're still continuing to build out value in this range, which we'll look at in a little bit more detail momentarily, but this is essentially what we're working with right now. We're building value within this range. If we get above or below, we have obvious downside targets. I think that rather than us having a directional break, what's most likely going to happen is that we're going to just continue to chop out in this range. That is really the max pain scenario for people. The longer we spend in this range, the more painful everything is going to be. So ultimately, I think that that the spot sellers will probably let up at the beginning of the week is what I'm hoping for, so that price can kind of drift back up towards the highs of the range, and then we can turn the sells on again and then smack it back down. So I do think that that's probably how this week plays out, is that early in the beginning of the week, if the sellers are smart, they will hold off on selling, allow the market to drift up a little bit, and then smack it back down and be able to sell their Bitcoin at higher prices. If they're stupid, they're just going to start, turning the TWAPs on right away, So, I want to see how the Asian session and the London session play out, but ultimately there is really no way to predict what New York is going to do. I think that the higher Bitcoin is into the New York session, the more likely they are to sell. I think if we're in the lower 41s and they start selling, I think they're kind of dumb if they do that, because I do think that they could just sell higher. But we'll move on from that. So that's pretty much it for the macro. Nothing has changed on the higher time frame, so there's really no reason to spend any more time on that. Let's go ahead and move forward. Let's get to the medium time frame. For more information, check out the Paragon group with the link below, where I cover everything from how I trade to how you can develop your own style. Main things to focus on for the medium time frame, first and foremost, are going to be the range. We have a pretty obvious composite high and composite low, which is forming out basically a 3,000 point range. So it has gotten a little bit tighter recently, especially since we got bonked down. Value's been compressing. As it stands, everything within this range still definitely is conducive to up. The trend structuring hasn't been broken yet. You could technically argue that this is where the trend structuring got really weak, but all it would take is, my doodle from last week. So this is what I drew last week as my plan, is that we would come down into the lows of the composite, come into the 34K anchored VWAP, and find support there. I think the only reason why this plan won't work is because the spot sellers are probably going to start to turn on their algos. I'm just kind of praying that they give us a little bit of a move up. because if we get that kind of move up, that's going to be a position to chase beta along the way, which is part of my plan. I want to chase beta along the way as we trade back up into the range highs, and it'll also give me an opportunity to readjust my risk and potentially slap on a hedge. So as far as medium time frame goes, there's really no indication that the trend structuring has failed just yet. I think that maybe the first warning sign is over here with this kind of rejection that I expected to see. And if we continue to reject off of this macro composite level around 41.8, then that would be a worrying sign. So at the beginning of the week, I really want to see this reacceptance and see price get back into this region and start to chop it up above this. This is definitely too early to call a rejection because we're very early into the session, and the fresh weekly VWAP is not established even a little bit really at this point because it's only got an hour and 15 minutes of price action. So things could change really quickly. But the key worrying sign for me is that throughout the weekend, the Coinbase discount started to tighten up, where Coinbase got very close to the other spot markets and to the perpetuals, and immediately since we got into the weekly open, that discount is starting to widen again. So definitely a little bit of a cause for concern going into the week from a risk standpoint. So let's go ahead and get into the altcoin section, and then just for illustrating my point earlier, anything that most coins are going to look like what Solana looks like in some way, that they had these kind of trend structures in Q4, and then as you get into Q1 of 2024, they all have these like bearish developments, right? And anything that looks like this, right, you want it to look like the opposite, right? You want it to look like this to be bullish on it. And when they're developing like this into the year, you just go ahead and throw them away and put them at the bottom of your list, guys, because until this has a dramatic shift in trend, it's going to be a risk off coin. And I mean, it only makes sense. This thing went up like 10x last year, so it does make sense that it would struggle a little bit right now. Maybe kind of the argument of the portfolio rebalancing, et cetera, while the larger risk market is not really chasing risk right now. So we'll go ahead and digress from all that. So that's going to be pretty much it for the week, guys. I'm not sure how active I'm going to trade this week. I would love to trade actively, but at the end of the day, I'm not going to chase that or try to force anything. So I'm just hoping that the market gives us some good opportunity. And if so, I'm going to try to participate and chase. Cheers, everybody, and good luck.